Good morning, traders. It's Tuesday, February the 5th. Taking a look at the charts, we got the SP 500. More or less, we've got a little bit, we're seeing equities continue to rise today. I feel as though we're kind of having this final stretch and a little bit of a blow off top. We're going to see, I think, pick up speed here. You can see we broke this first initial downtrend line based on a closing bar, and we kind of traded under that for about a week and a half, and then we popped through it, and we're starting to extend to the upside. So we do have a potential move continuing to go up here to the upside, stretch a little higher, get close to this potential 2,800 level. Overall, the market, I think, is going to have a very sharp correction in due time, where we see it could just be a pullback back down to the 2600, something similar to these levels here, where we've seen a very strong 1 to 2 week correction. And the big question is, will that be a consolidation for a run to new highs, or is that going to be the sign of a potential double dip in the market or a break of this low and we start a bear market? So we've been flirting with these levels. The fact that we broke this first level is a good bullish sign. It's giving us lots of room to the downside to correct and build a base before trying to continue to hold this bull market in place. Looking forward here on the 30-minute chart, we've gone from an oversold territory. It's popped all the way up. It's got a little overextended, and it looks like later today or tomorrow we should start to see a bit of a downward bias in the market. You can see we got kind of multiple waves kind of pulling down here, and if we were to just stretch this over, we're similar to, if I just zoom in a little bit here, we are getting close to something kind of like this type of move in the market. Let me just box it in here. Something where we see the market kind of correct down from these levels. We're about to get into that type of price action where these bars, we've got a double wave kind of formation, giving us this kind of pullback. So we're getting a little overextended from the 20-day moving average. Today we're going to gap up and push higher. The overseas markets also closed fairly strong yesterday, up over 1%. So we're only up about a 0.2% or 1/3% in pre-market. So we got some room for the market to continue to push higher. I do feel as though it could be a little bit of a blow off top, something like these where you get a big strong move and then it corrects. This one here, an island top where it gaps up, holds its ground, but then gives it back the next day, gaps lower, and goes oversold. And I think we could see that today. I think we could see some type of strong session, get everyone super bullish, and then the market rolls over and pulls back for a few sessions and consolidates. Yesterday, we did see small cap stocks are really moving higher. Let me go back to the daily chart here. Small cap stocks continuing to muscle higher, really starting to extend. They had a big pop yesterday, and of course, small cap money moving to the risk on assets really helped Roku. This is the position we are in. It had a big pop. It almost went up to 51 levels, about 44 cents away from hitting that first target. We did have a strong pop. We are expecting the equities market to have a little bit of a pullback, so we did trim off some profits there yesterday. We caught it on the upswing, so you pretty much had all day to execute and get the same price. It even closed higher than where we initially started to pull off our 8% partial profit, move our stop to break even. You can see we're a little overextended from the 20-day moving average, cycle topping out. We could be under a little bit of pressure today overall, and we'll see how the market reacts here. Overall, pretty much came up to this gap fill, is only, again, 40 cents away, 44 cents away. So it is getting into a little bit of a resistance zone. And if we looked at yesterday's intraday chart, you can see a huge pop here. I can't quite pull up the volume. I can squish it in, but more or less huge buying in the morning. And then in the last 20 minutes or 10 minutes of the session, somebody obviously had to clear out a bunch of shares, and they just hit the big fat sell button with their thumb and just drove price down, completely collapsing price and unloading. But usually what goes straight down usually comes straight back up. So that big down bar completely negated this morning with pre-market trading. If you look at the price action, it's gone all the way back up with a nice little bull flag here to where this bar originally went. So that's a nice thing about moves that go straight up or straight down based on one big order, news, or weather. Those type of spikes in the chart type tend to be negated fairly quickly, and it's been kind of regained again here. Looking at the rest of the markets, let's just jump over to gold real quick. Gold continuing to hold up. It's pulled back from the highs. We trimmed off our position up near the high on our GDXJ. It's pulled back to the 5-day. It needs to find traction here, or we're coming down to the 20-day, which is also this consolidation and the top of this consolidation. It could continue to correct a little further, potentially if it continues to unwind and money moves into the equities market. We'll see how it unfolds. Overall, I do expect price to start chopping around. It already is. To some extent, if we go and look at the miners here, GDX, we had a big gap up, a big strong rally. Yesterday we had a gap down. It's starting to chop around, very similar to this type of pattern here. You start to get choppy, same as over here. There is potential where in something like this where it's having its first kind of running correction and we get a final pop up into the 33, 34 area. But overall, in the grand scheme of things, are expecting it to get into some it is into significant resistance. If we just look across this chart here, you can see we've got pretty much a upper half of this resistance area right through here. So from the 33 to 34, things could get really wild. At any point, we could see a pullback in the market, something like this, or something more significant like this, bringing us down into this potential 30 mark going forward before it potentially tries to go up and push higher and break out. Looking over at energies real quick, natural gas up 1% this morning. We are looking for it. We're looking for some type of washout exhaustion move. I'd love to see a big down bar and a recovery. It is getting close to our nice support levels down at this pivot low. Let me just zoom out a little bit here. We do have a significant low right here around this 256, 258 area. Another one down here. The market loves to run and push to new nominal highs or lows. That's how it shakes the market up. Ideally, we'd like to see it break those levels and recover. We talked about this yesterday. If we go to the weekly chart, you can get a good feel for this level. If we throw a horizontal line across here, very significant support level right across here. You can see the market came down, bounced, and then broke through it, got close to it as resistance, came back up, finally broke through it. It's bounced on this level many times. It does have a lot of support there. We're getting close down to here, but we still need to drop down in this 250 to 260 area, which it's pretty darn close. Overall, I'd like to see some type of spike down there, and I think it could be a good play for a technical bounce up to the 3 and potentially have a lot more room going further back up into this the 420 area looking forward. Now, natural gas is a lot tougher to trade. There really aren't any good ETFs for it. The ETFs lose value over time, so even if this was to move up 10%, but it takes 2 or 3 weeks to do it, the ETF will pretty much be flat just because it depreciates in value. Similar to options theta, it's just the way the contracts roll and those ETFs are built. Over time, they lose value the way they roll to the new front month contract. So it's a lot tougher to catch a longer term trade in natural gas. Is really you need to catch a technical quick move, get in, get out, or the ETF will just take your money away. Looking at crude oil, down 0.7%. You're looking at the long-term charts. We got our blue horizontal support and resistance areas. Zooming into the chart, this is the weekly. We came up, we tagged it last week, had a nice strong close last week, but overall this week we're pulling back. We are getting squished in here up the 5-day moving average. Very strong momentum play here. At this point, it's still holding up. We do have the 20 period coming down, and we've got a couple levels of resistance through here. So this could become wild and choppy, and we might even see it pull back a little bit more. We are going to have some support down along this level and more or less through the heart of these other bars right through here, this previous low. So we could see it pull back, potentially consolidate down here, pierce this 50 level. 50 is a whole number. From there, it could form a really nice breakout to the upside. You could argue it might have some type of head and shoulders formation, but overall this shoulder is higher, so it's not the best setup. Prefer that the right shoulder be lower than the previous. We've got a downward sloping neckline. But overall, that's kind of where we stand in the crude oil. It's stuck under resistance, stuck above 5 period, and kind of flirting around here with what it's going to do next. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.